to a couple of corporate conversations. The company on our radar is now Bikaji Foods, and there is, of course, a big debate around potential slowdown in demand. So is this really happening, or is it very different for the foods business, and what are the inflationary trends currently looking like? Well, we have with us the management joining in, Manoj Verma, Chief Operating Officer at Bikaji Foods. Manoj, great to have you on. Thank you for joining in. So let's just start right there, because some of the companies, they've been flagging off. I mean, these are FMCG companies, not foods per se, but they have been flagging off concern overall in palm oil prices, the inflation. What has that meant for you in terms of edible oil, inflation inputs, and also the general sense on demand? Tell us the trends that you're noticing so far in the third quarter.
Good morning, and thank you so much for inviting on the channel. I think what you spoke about is absolutely right. The palm oil prices in past couple of months has gone up far beyond what we had expected. Earlier it was trading at 80, then it went to 100, 120, and now at 140 kind of a stuff. So yes, this is putting pressure on the bottom line. However, to a certain extent, these prices are being passed to the consumer. But I think, in this quarter, we'll see further prices going up. So that's going up to the consumer, right? And in terms of the palm oil prices, we feel that it should not go beyond this. This is at the peak, which is what we believe.
Can you just tell us how much is the price hike that you have taken in Q3 or in October, November, if you could tell us monthly? To what extent have you passed on the inflation, and what more will need to be done if you are to protect your margins completely from this palm oil inflation?
So pressure started coming on in the end of Q2, right? And in Q3 beginning, we started passing the price, but not to the fullest. What we had already done is about 2 to 3% prices have already been passed. And I think there is a scope of further 2% more prices would go up.
Okay, all right. Hi, Manoj. Good morning and good to see you. So you're passed on some kind of pricing, but what does this do then to your volumes? Are you seeing some kind of impact? Earlier, I think you were targeting 13 to around 15% volume growth and 2 to 4% price growth for the year. But now you've already taken a couple of price hikes. So have you exceeded that 2 to 4% price growth, and volumes still intact, the targets that you had?
So we haven't exceeded 4% price growth for now. But yes, I think by end of the year, for this quarter, certainly, that kind of price would go up. And in terms of volume, of course, with the prices going, so much high, so there would be a little bit of impact on the volume growth, but still it will be a high single digit or a double digit growth for sure.
Earlier, you were guiding for 13 to 15%. So now you say that maybe it could be a little bit lower than that. Could it be in that vicinity of around 10 to 12%?
Could be, yeah.
Okay, all right. Help us out with your margins as well. What should the outlook be? Part of that input cost spike, you have managed to pass on, but there's still some more to go. You'll have the benefit of some operating leverage if demand is good enough as well. But what should the outlook be in terms of margins?
So now, without PLI, we've been talking about 13.5% EBITDA. With these kind of prices, unforeseen stuff and all the prices not being able to pass, I think this would impact, say, by about 100 basis points.
Oh. So margins are going to be hit by 100 basis points despite the 2-3% price hike.
2%.
We understand.
Yeah.
Yeah, but you're going to take another round, right? That's what you're saying. You will take another round now.
Yeah.
But you're still penciling in about 100 basis points of a margin hit. So that makes it very clear. Now let's talk about growth itself. With this kind of price increases, is there any impact in growth, any down trading? Is there any change in grammage that's happening?
So when we say price increase, so no price point packs such as 5 and 10 rupee, where you do not have an opportunity to increase MRP. So it's a fixed price point. So that's where the degrammage comes in. Okay. However, in the large pack, which is not driven by the grammage, that's where the price increases do happen. So it is on both sides.
Okay, all right, Manoj, tell us about the sweets portfolio then. I think it was around 12.5% of your total mix, but during festive times, it goes up, I think, to mid-20s. How was demand for that? Was it good enough? And did it go to those levels that you expected?
Yeah, so sweets did extremely well. If you look at the right way to look at season for sweets is quarter 2 and quarter 3 put together, because it depends on early Diwali or late Diwali that impacts quarter 3. So quarter 2 was a fantastic growth, mid-20s, which is what you just spoke about. However, quarter 3 will be less, but sum total, if you look at, would be about close to 10% sweets growth. In terms of demand, I think there was no issue. There was a demand by far than what we could supply. And at certain point in time, we had capacity constraints as well. So otherwise, festive season was very nice and a very good growth we delivered.
So can you give us growth projections? That's the sweets portfolio you're talking about. But Mr. Verma, can you give us growth projections for the full year? I mean, we're practically down to the third quarter is also almost over. Given the issues that you described, full year volume growth, what is the expectation, and also overall top line growth for this year?
So full year volume growth, what we said, 13 to 15%, we would stay with that stuff only. That's where we would be. In fact, if we talk about the stationery category, is exactly in line with what we said, 13 to 15% we are falling in. So that's where it is, and I think by end of the year we should be in line with the overview or the indication what we gave to all of you and to our stakeholders as well.
I think it still could be 13 to 15%. Earlier, you were hinting it could be a little bit lower, right?
We said 13 to 15%. We would stay with 13 to 15% kind of a growth. Value. Yeah.
Got it. 13 to 15% volume growth.
I said 13 to 15% would be value growth.
Value growth. Got it.
The prices going up would be a little lower than this.
So what's the revenue? Okay, let's come to top line. Top line target is 13 to 15% for this year, FY25.
Right.
Okay, got that. All right, we'll leave it there. Manoj, thank you very much for joining in and giving us some perspective on how consumer companies are battling this rise in palm oil prices. He's saying despite the price hikes, there will be an impact of about 100 basis points on the margin. Take a quick break. On the other side, we'll have the management of Inventorous Knowledge Solutions joining in to talk about the issue which is opening out and, of course, the business outlook.